Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that the market has just rejected to the upside a quite significant level of monthly demand and support. In fact, exactly from here, all this previous rejection to the upside was created. The market then retraced back into the area with the creation of an M pattern, and after the creation of an M pattern, what we usually expect is a rejection to the upside, which in fact is exactly what this market gave us, also rejecting, as I just said, that previous monthly demand and support. Now, at this point, we must identify the new structure the market has. In fact, in creating this move to the upside, we also had the break above this previous level of resistance from which the previous move to the downside was created. So essentially, this is actually the previous high, which has now been broken to the upside as we just had the monthly close above the zone. And now this previous resistance is turned support. The market is in fact testing the level as support, and we could expect bullish continuation to be created away from this level. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, the first thing that we have to identify is that we just had a very strong impulse to the upside. After creating this impulse to the upside, what you would expect is for the market to provide a correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And what this gives us is a 0.32 Fibonacci retracement here, lining up exactly with this previous high, which is previous resistance now turned support, which creates confluence of support at this level that we could expect this market to want to go and test before then continuing higher. So we could expect short-term bearish price action and then longer-term bullish continuation, at least by judging on what we have on the monthly and weekly timeframes. Dropping down on the daily time frame, what do we have? Now, here on the daily, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we expected this continuation higher. Then we had this impulse. I explained once again all the reasons for which we could expect this correction and continuation higher. And again, that is exactly what the market gave us. And then from here, I made another breakdown explaining all the reasons for which we could expect first this correction and then the creation of a new daily higher high, which is again what the market gave us. And by the way, I will link in description all those previous analysis, so you can go and check them out for more free education. Now, at the moment, what we must identify is that in creating this correction after this impulse here on the daily, we had a quite sharp movement to the downside. It almost seems like new sellers are coming into this market. So in a situation like this, as I have already shown on the monthly and weekly, I would expect a bit more bearish continuation. Now, if we get that, that is where things get interesting. If from here the market just continues higher, we have to reevaluate the situation because there isn't anything interesting. What I am waiting for is a potential break lower. If and only if we get this break lower, that would create this M pattern. And we would have an M pattern testing that confluence of support that we have previously identified on the weekly time frame. And that is where I see things getting quite interesting because that is definitely an area inside of which we could see more institutional longing, which at that point would further increase the probabilities of a potential rejection higher away from this level. At that point, completing the M pattern that the market would have created from a daily perspective. Now, if we go and see what we have when it comes to the commitment of traders, so why and how institutions are moving their positioning, what we can see is that with the last reports, we went from having 71.4K net positions all the way up to having 149.3K net positions. So showing a huge increase of net positioning, meaning that institutions are moving to the bullish side of gold. So it's no surprise that the market has been pushing to the upside so aggressively, because clearly institutions are longing gold. We see in fact 20,000 longs added with the last report and 16,500 shorts getting closed. So as institutions are moving to the bullish side of gold, if we will see this correction to this confluence of support that we have previously identified on the weekly, how we could be approaching at that point a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the CO2 data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, potentially what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete the M pattern that the market would be creating here on the daily time frame at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns and Telegram signals, the CO2 data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down here past the testimonials, you will see that you have the possibility to gain automatically access with the email and password that you will create during the checkout here on the website. So I really suggest to go and check it out as soon as possible. The link is both in description and also in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.